Okay, I can't hear you, Julia. I think you might be on mute.
Can you hear me now?
I can hear you now. How you doing?
I'm good. I'm sorry about that. The other invite had a different meeting
Yeah,
link, so I was in
that's
a waiting room.
that's totally my
I'm like,
fault. I had to
oh no,
update the link, so my bad. It's
so
like eight.
nice to meet you.
Likewise, it's like 8 p.m. in New York at the moment, roughly.
It's 9:18.
9:18. Are you like a night owl? Because I cannot do podcasts at night 9:18 in the evening.
Once the kids are down and a little buffer to become a person again, we're
Yeah,
good. We're
fair,
grooving.
fair. I did read you had 3 kids, so that sounds like a lot of work in addition to running a venture firm. So I get it.
We want all the things. So we
Hey,
chose this life.
why not? Why not? Well, thanks for taking the time and reaching out and looking forward to today's conversation. Did you have any real questions for me before we jump into this? Because I know you like, is this like your second podcast ever? Or
Yeah,
oh
my
wow.
second.
Awesome. So have you like scheduled a whole bunch of like, are you on a podcast tour at the moment or?
No, I think it's really just been like kind of organic of sort of some of the press that sort of come in. We had
Hmm.
the launch for the app ended up coming through like TV. So I've kind of jumped around a little bit,
Hmm.
probably not in like the typical order, but it's just about having conversations with folks that we feel aligned with, whose audience feels aligned, and
Yeah.
um, many different mediums. So here we are.
Awesome. Love it. Love it. Well, we may as well roll right into it and just see where this goes. I'm a big fan of just having open, transparent conversations and going off on down rabbit holes and on tangents, which I think make for a more enlightening listen for our audience rather than being, scripted and here's a list of questions. So, first and foremost, I wanted to explore a little bit more about you and where you've come from and, going uh way back to Insight Partners, which you left almost 10 years ago now. But while you were at Insight Partners, which is a venture capital firm, you did invest over $100 million essentially in Marketplace and SAS companies. And curiously, you also invested in places like Russia, which I would personally really just like to know a little bit, firstly, about your time at Insight, but also what the tech ecosystem looked like in Russia back in the early 2010s.
Oh, interesting questions. So I guess just jumping into insight in general, such an incredible springboard, and they've done so well for themselves and also just such good human beings, which is a rare combination.
Mm.
Back then, they were kind of one of the first funds that sort of flipped the model of what venture typically looked like. So a lot of the other funds deals would sort of come from the partners from the golf courses, and maybe we'd have kind of like a young person in a back room crunching numbers somewhere. And Insight, changed that model. They kind of hired lean and hired well, and gave a tremendous amount of autonomy to that analyst and associate class. I think when I kind of look back at it now, it's probably akin to what like principles that other funds potentially do, right? And so just
Mhm.
to have the flexibility to go out anywhere in the world, look at any companies under the umbrella of soft tech, right? And that could be everything from e-commerce to SaaS to marketplaces to infrastructure software, build relationships with the CEOs of companies that you think are interesting, really, and kind of like loop in a partner at that last mile. That flexibility to lean into the kinds of companies that you yourself find intellectually stimulating is just such an incredible way to start your career and to have kind of that
Mm.
freedom. And so you think about the ability to speak to 5 companies in the same space and all of them are growing 10%, but one of them was growing 80% and say, well, what's your secret sauce? How are you thinking about the world? And then to have 5 years of those conversations, it's probably like the best kind of business school or entrepreneurial boot camp, I could think of. And so they were one of the first that kind of flipped the model that way. And about like 80 or 90% of the deals came from that analyst and associate class. And so a lot of folks afterwards have sort of replicated that model in terms of like the cold calling, right? And sort of that outbound. Um, but had such a tremendous experience there and
Yeah.
would not have left if I didn't get sort of the entrepreneurial itch myself. And
And
I've stayed close with
just on
a
that,
lot of the folks
Julia, have
there.
you tried to embed that type of framework or culture into Pari Passu Ventures as well, where you do give analysts that sort of autonomy to go out and find deals and build relationships with company founders and the like?
Yeah, I think that seed thought is there. I think we are still fairly lean. So when you think about Insight and building out this big analyst class, like it was a beast, right? It was like
Mm,
really an incredible machine. Right now, a lot of the incredible deal flow that we're getting is really, deep rooted relationships that we fostered over, the last couple of decades, give or
mm,
take at this point, right? Which is crazy, the passage of time. But the beauty of, not that I'm old, but the beauty of getting older in this space is, the beauty of those relationships and how they intertwine and how now you can be on a tech basis with a lot of the decision makers at other funds. And so deals
mm.
happen faster. At the end of the day, you want to back companies you like and founders you enjoy with people that you think are good human beings and also smart investors. And so
Mm.
it's been great to have spent so long in this industry and have kind of ping ponged between the operating side and the venture side. I think
Yeah.
that seed energy for sure is within Pari Passu, and how we think about deals and who we bring in, both on the investor side and on what companies we back.
Yeah. And I want to get back to the Russia question, but one thing you've
Oh,
triggered there around my thinking was around, the assets that one develops over the course of their career. And I recently turned 40, and the relationships that I have now orders of magnitude, not only greater in number, but also depth than what I had, say, when I was 25. And
100%.
yeah, so a lot of people listening to this might be perhaps founders, but many might be thinking about becoming founders, but perhaps in their late 30s, early 40s. And they see all these stories on TechCrunch, on Mashable, and it's usually kids in their 20s, like, Alexander Wang, for example, at Scale AI, 27-year-old in charge of a $15 billion company. And they might think, maybe the ship has sailed for me. Like, what do you say to people who are in that headspace?
Oh my gosh. I mean, life is long now. Like I feel there's one of our investors that invests with often is Kim Perrell, who's an amazing serial entrepreneur. And she talks about this a lot where she's like, how many companies she started in her 20s versus 30s versus 40s. Like it's every day is a new day and there's no time like now. And I
Mm,
feel like, it's interesting on all parts of life, on personal and on professional. I feel like I'm just getting started. I feel like every kind of 10 years is sort of a beautiful new chapter, or every
mm,
year is a new chapter in a way, right? But to your point, the relationships that you end up fostering over that amount of time, and especially, going through those formidable years with the people that are now, in these positions, you can't really replace that. And so there's a benefit of, I can only imagine the things that,
mm.
I will end up starting, in the years to come, although this is something I'm very, very passionate about and excited about, right?
Yeah.
But life is long. So I would highly encourage no one to look at their own age. There are people
Mm.
that are starting incredible companies in their 60s and 70s, and it's age is sort of what you make of it.
Yeah. And then apart from the network, there's also the advantage perhaps of having spent maybe 10, 15 years in a certain industry and knowing the problems and challenges and target market in that industry quite well and having a really mature understanding of it and therefore being in a unique position to design the next sort of disruptive platform or whatever it is in a particular industry. Whereas someone perhaps in their early 20s may not have the same level or definitely won't have the same level of insight when it comes to a specific industry and the challenges around that industry.
I think expertise is a great point, right? The depth of perspective and seeing where the gaps are in certain
Mm.
markets. I think actually one of the other benefits of starting something later in life is hopefully life has smacked you around the right amount to humble you and to get some of that early ego out, right? And so
Yeah.
that you're not starting something just to, have something shiny to write press about, right? But you
Mm.
really have conviction in what you're building. You really thought about, where your passion is, and you're also humble enough to not try to be the smartest person in the room and to, like check yourself and have other people check yourself. I think a lot of that comes with age for some people,
Mm.
and is one of the benefits of hopefully having more feet grounded and having grown personally through lessons that generally only time can give you in life and the experiences that sort of foster it.
Yeah. Yeah. I think getting knocked down a few times only to get up definitely strengthens us and also just makes us a lot more objective. And like if I think back to say my early 20s, if I had an idea, I would think this is the best idea in the world. There's no reason why this won't work. And of course, we know how that story goes. You go off, you spend a bunch of money and time taking something to market. The market tells you it's a really crappy idea. And that happens a few times. And you basically learn, okay, maybe my ideas aren't the best. Maybe this business model has a lot of flawed assumptions underpinning it. Let's go out and test that and actually learn what the market wants and how close or how far away this idea of mine is from reality. But you don't really know that from day one. And that's perhaps one of the benefits of, yeah, like you said, getting smacked around by life a few times.
A little bit more humility. Yeah, I
Yeah.
think that that lets you be open to feedback and hearing it versus be on the defensive, right? And so
Mhm.
I think hopefully that's the benefit of age and experience for many people. For some people, not necessarily the case, but hopefully for most, they
Hopefully
let
for
that
most.
happen.
Yeah, absolutely. Um, so circling back, Russia, 2014, early 2010s, you made some investments there. I'm not sure how many you made or how deep your experience was over in the Russian market at the time, but just curious to know what it was like at the time, in terms of the tech landscape.
Yeah, well, I would say in my 5 years there, maybe I spent kind of 6 months focusing
Okay.
a bit on Eastern Europe more broadly.
Hmm.
Because I had the flexibility to really look anywhere in the world, and as long as again we're sort of under the umbrella of soft tech. I was originally born in Ukraine, so I moved when I was 3. So
Hmm.
my family's Ukrainian Jewish, and I thought, I wonder how many like American venture capitalists like happen to speak Russian. Like not that I mean, my English was much better than my Russian,
Yeah.
but enough to hold a solid conversation and get around and, do some
Hmm.
light diligence and, whatnot. And so I sort of pointed the cannon, per se, that way to, look within Eastern Europe and, look at companies that maybe were based there, but we're selling, obviously externally. So not to really kind of limit that market. And there's a tremendous amount of talent in Eastern Europe, right? So I was in Belarus, I spent some time in Moscow, I kind of like really hopped around a bit in Eastern Europe. Um, Tremendous talent. Uh, you know, if I think of sort of like my family, like everyone grew up essentially being in mathematics or in science, right? Especially
Mm.
when it was Soviet Union, like business and money was like kind of like a dirty thing, right? It was sort
Yeah.
of like an under the table, whatnot. And so if you wanted to have the prestige that in the US maybe comes with what people think of their paycheck, it was about education, right? And so like
Mm.
most people in my family are statisticians or data scientists or whatnot. And so I think a lot of that seed, analytical mindset, problem solving or whatnot was a lot of what I saw in like incredible entrepreneurs and talent there. I think, the reason we didn't invest in so many companies at the time is there's a lot of also complexity around getting comfortable with how things are done in certain places versus others. And
Mm.
we ended up backing one company at the time.
Okay. And
But I wouldn't say I've spent like a tremendous amount of time there to have a very, very deep perspective beyond the 6 month deep dive.
yeah, no, that makes sense. And I guess, I mean, education is one thing, but one thing that I think really differentiates the US, not just from Europe, but also from Australia, where I was born and raised, is mindset and attitude. People tend to be really enthusiastic and go after their goals, even though it's fraught with pitfalls and challenges and inevitable failures. And like my family came to Australia from Macedonia, so Eastern Europe. And one thing that I noticed with Eastern Europeans generally compared to Americans is far from enthusiastic, a lot more pessimistic, generally. And perhaps that plays into the tech ecosystem in some way. Like to build a startup, you really need to be enthusiastic and have, that whole Steve Jobs reality distortion field working in your favor to some degree. Of course, that distortion field can be a blessing and a curse, depending on, how much you listen to it. But did you, in your short time, in the Eastern European market, notice a difference in attitude between, say, the States and, yeah, Ukraine, Belarus, and so on?
Uh, hmm. It's an interesting question. I think maybe grit is sort of something you have to have even more so to,
Mm.
I wouldn't wouldn't say there versus here. You need to have a lot of grit anywhere to be an entrepreneur. But that was definitely a common denominator, right? Of wanting to build something there and have a more scalable mindset. And, a lot of the companies were like, okay, well, we're domiciling in Amsterdam or whatnot because we're thinking globally and we want to make sure, X, Y, and Z. But again, kind of small dive within Eastern Europe, and most
Yeah.
folks, that we ended up kind of looking at have much more kind of like a global mindset. So less of like sort of that bubble approach.
Awesome. Awesome. Well, that was a small dive in Eastern Europe, but you had a much deeper dive into Village Lux. So you are the founder and
Oh,
CEO of Village Lux after you left Insight Partners for about 7 years. And you guys were essentially, I mean, the definition I have here is the Airbnb of luxury fashion. Would just love to just briefly touch on this before we get into Pari Passu Ventures and just tell me a little
yeah.
bit about your time building Village Lux, what the impetus for it was, what you learned, and so on and so forth.
Absolutely. So, when I was at Insight, I ended up seeing the shared economies of the world a bit before kind of mainstream maybe noticed, right? So
Mm,
saw Airbnb, saw, Uber and what they were doing with UberX. And the aha moment for me was, okay, I think the shared economy is here to stay. I think this is a pretty fundamental shift in consumer behavior. It's not a fad, it's not going anywhere. And so the question for me became, like, what other personal asset hasn't been unlocked by shared economy that I thought made sense? Never thought I would be running a fashion tech company. But the aha moment was, luxury fashion was sort of a space where, I have 100 things hanging in my closet. I physically wear two at a time. You have this
mm,
gap between, ability to utilize and desire to do so. You have people that want access to inventory that, maybe financially they couldn't buy as much as they wanted to, and then other people that you have this latent inventory. So it was this unlock of shared economy to a different asset class. We built it in a way that was meant to be peer to peer, so not touching any inventory. Kind of at the time, you'd had like Rent the Runway, which existed, which
mhm,
bought a lot of inventory. They operated, essentially a powerful logistics business and the largest dry cleaner in the US, and, just this beast of a machine. I wanted to touch nothing, right? So it was about how do you unlock this whole concept of kind of bringing this sisterhood to high fashion and women borrowing from each other as they do, but I could borrow a pair of shoes from, a woman in my city versus just someone within my network. And so
mhm,
I think the seed thought of that had a tremendous amount of magic that people really connected to. I think, as we scaled the business, and then obviously COVID was a fun curveball when you think about peer-to-peer
yeah.
fashion. It's like last guy to company you want to be running during a
Hmm.
pandemic. Um, but I think, it was a it was a really difficult model. Like in my autopsy of it, I think that I was so focused on solving the problems and was so stubborn to like drag this thing to success if it killed me, which there's a benefit to that kind of stubbornness when you're, a founder. But there's also, the ability to sort of not check yourself and be like, like I'm solving all the problems, I'm putting out all the fires, but like, shouldn't this get easier at a certain point? Like, shouldn't the rock sort of start rolling down the hill?
Yeah.
And so there was a little bit of a gift in COVID of like, it forced that business to shut down because 2
Mm,
years people didn't wear pants to Zoom meetings and didn't go anywhere. And even then, I was like, I'm going to go down swinging, forget fashion. Let's look at other sectors where we can use the tech. Maybe people aren't going to send their families to nursing homes. And so maybe you're going to have to rent technology. Like for me, it was never about fashion tech. It was about really kind of this mindset of problem solving, right? Like I mentioned, all my family are like
mm,
mathematicians, right? And so um, ended up almost launching an art business, and it was just too hard of a pivot with an existing cap table and not knowing when the pandemic would end. And I had a few founders, a few of our investors that were also like, "You don't have to martyr yourself for like it's okay." And it's interesting because I think if the purpose of life is growth, which I really do believe it is, then I probably grew more as a person through like going through the pain of shutting something down versus if it had even succeeded, right? A lot of it again was circumstantial. And before COVID hit, we were already like had this aha moment of we should just power this for retail tech, like peer to peer and luxury is like super difficult. And you'd kind of seen the other players that were buy sell in the peer to peer space all
mm,
add centralized logistics, for luxury. Like it was a really hard play, but tremendous learnings and such an incredible journey, and so many things that we solved for the first time and were first movers in. And, I think the seed thought of going into Pari Passu and the fact that all the partners are current or former founders, all the people or almost all in our community are, you know, people that are founders or C-suite or, really high level operators that have rolled up their sleeves and built something.
Hmm.
There's a real shared experience there. And I think that unless you've like stayed up all night worrying about payroll, you just can't teach that experience to a career investor. I think it really changes you at your core. I think it changes how you think about human empathy, but I think it also just changes what you think founder support looks like, right?
Hmm.
And so, there's always a fire to put out. It's not just asking someone's numbers every quarter. And I think that kind of community and that kind of investor base on your cap table really helps de-risk the win for founders, and to have the kind of relationship with my portfolio company founders that they can tell me not just shiny update emails, but like tell me what the issue is, because
Hmm.
hopefully we have that connection. They know, I know there's an issue. There should be one. Like if you're not going, unless you're not going fast enough, something's not breaking or hurting or whatnot, right? So um, that was a little more long-winded than I meant, but hopefully a good perspective on kind of this journey.
Absolutely. I mean, there's a lot that I wanted to unpack in that. I mean, that firstly, that never say die attitude that founders have. Like I was reading about the Toyota family earlier today and how after they lost the war, so World War II, there was no demand for automobiles anymore. And so they pivoted to selling food because large swathes of the Japanese population at the time were at risk of going hungry. So it's crazy how, there's always that, well, maybe I can move over here and do that instead. And it's like anything short of selling or shutting down a company, oftentimes people in this space will always look for that. But sometimes it's best to just say, hey, maybe we should shut this down and move on to something completely different that's aligned with us. And then the second thing you said, which I can relate to more on the level of just my humanity. So, going through COVID, for example, was really challenging. Like here in Melbourne, Australia, we had the world's longest lockdowns, like 350 odd days, I think it was. You couldn't go out further than 5 kilometers from your house. You could only spend 1 hour outside a day. It was absolutely crazy. And going through that and getting to a place which perhaps my, say, mental fortitude was definitely tested when I now see other people going through difficult times, I am way more empathetic than I would have been, say, 5 years ago before COVID, having seen that sort of side of myself. Whereas previously I was like, no, hustle, just get up, have a cold, jump into an ice bath, hit the gym, get to work, like that whole hustle bro sort of culture, which I think I'm very much done with that nowadays. But it's funny how going through something then makes you a lot more empathetic. And to your point, having gone through what you went through with Village Lux now makes you a much more empathetic managing partner than someone who perhaps hasn't gone through that at another firm. Maybe they lack that sort of same level of empathy.
I agree with you. I mean, I think, having been an investor before being an operator and now being an investor after being an operator, I feel like it's nice. I mean, it's not to say you can't be an amazing investor without being an operator. So there
Mm,
are some incredible ones, but I do think it gives you a bit of a kind of a superhuman, like it's just the ability to read through the lines. It's the ability to have the shared experience. Like, I don't know. It's like if I see a founder send an update email where there's a lot of shiny stuff, but I'm like, not much quantitative stuff in there. I've sent those. What's
yeah.
really going on? So it's just, I think it's just different. I think, again, it's all about life and growth, and hopefully makes you a more perceptive person to see kind of where people are going through and how they need support. And hopefully they can
Mm,
feel that even energetically from you too, right? I think hopefully it gives you maybe a better pulse on just, people, right? And the openness to have that kind of connection with others. And again, roll up your sleeves and actually support, and know that support can sometimes be like having a pep talk with a founder, right? That's like
mm,
going through it because they have to fire someone that isn't doing something, but is someone they're close to, like there's just a lot of difficult things that happen with an entrepreneurship, and to have someone that's really in your court, for the long haul, I think is
Mm,
very powerful. I try to
absolutely.
be the kind of support that I would want as a founder, for my portfolio.
Yeah. And you did say that investors who don't have the operator experience can also be great investors. And, one name that comes to mind whenever these conversations come up is Bill Gurley at Benchmark. I believe he was an analyst on Wall Street before he started before he joined Benchmark Ventures. Um, do you have any sort of thoughts on the pros and cons of being an investor without the experience of being an operator and having, walked through fire in the past and developed that sort of um, relatedness to the problems that entrepreneurs face on a day-to-day basis?
It's not so black and white. I
Mm,
think, maybe it just depends on the person, right? Again, if you have the ability to really connect with your founders and not just, ask for numbers every quarter, and really, if you're a value add investor and then you actually roll up your sleeves to help and to build and to problem solve when things aren't going well, right?
mm,
Um, then in a way you're co-creating and building, right? If you're, again, like, not a passive investor. But I do think that for sure I see the benefits of it, of having gone through the experience,
mm,
and I see our founders benefiting from that within our ecosystem, right? And so, there are incredible founders that invest with us that, have built $200 million plus companies and whatnot. And, there are some that um, their net worth is still tied up in equity for that future win, right? But all of them have had failures and successes and things that they would want to then pass their lessons along for someone else to learn from their, mistakes or
yeah.
navigating, or whatnot, right? And so I think that's where kind of, I don't know if it's that empathy or but that, like, connection of that shared experience, that
Mhm.
it's hard to explain unless you've really been a founder yourself. I think a lot
Yeah.
of investors that end up flipping from investing to then operating a company are often surprised that, like, it's much harder than you think, because outside in, it's like, oh, well, I would just do this or I would just do that. It's like, you don't understand the emotional state that you will be in when you are in the trenches. Sometimes you can't see outside in, right? And so uh, it's just it's
Yeah.
very different. I
Yeah.
think it's very additive.
Yeah, absolutely. And it's funny what you say there about the emotional state. It's kind of like your friend telling you about their toxic relationship, and to you, it's absolutely clear what they need to do. And so you're like, you just need to dump their ass. Like, you've been going through this for so long, but you're seeing their world with, you're not seeing it through the veil of all this emotion, and mental baggage that you're holding on to. And so the way they're seeing the problem is very different to the way you're seeing the problem. And of course, this also applies in entrepreneurship, as you alluded to there. But on Pari Passu Ventures, so this is the
Yeah.
next chapter of your professional lives, as we were talking about earlier. As you get older, there's always opportunities for new things to emerge and new exciting journeys to go on. And this is your new exciting journey. 2 years ago, you raised the first fund, from what I understand. Can you just give me like the highlight reel in terms of how much you're raising or how much you raised, what you're investing um, in terms of your mandate, and we'll go from there.
Sure. So a little bit different. So instead of being set up as a fund, it's
Mm-hmm.
a invite only network of kind of heavy hitter founders, operators, select accredited investors that we invest on an SPV basis. And
Okay.
so I think when you look at other, I guess since December of 2020, we've backed 23 companies to date. Average check, give or take, is 1 million.
Mm-hmm.
So, for us, the whole reason to set up the venture firm in this different way, to allow, this, again, ecosystem of incredible entrepreneurs and founders to invest deal by deal, is very intentional, right? I think there's a lot of investors that sort of start with SPVs to prove a track record and then forget about this and raise a fund. Like, there's a reason we're doing this, right? And there's interest potentially to, raise a fund maybe in the future for follow on or whatnot. But this part will never go away. And the
Mm-hmm.
reason for that is, you know, it takes a village to succeed. I think that's in all parts of life, personal, professional, but definitely for professional. And I think the more people you have on your cap table that have, again, rolled up their sleeves and actually built something, right? and have had that experience and want to give back and want to help and really be part of that journey in a different level of support, I think the more likely you are to succeed as a founder. And so if you think about starting with that founder supporting founders piece and operators supporting operators, a lot of really, really incredible operators that haven't had an exit yet, that again, maybe have their their net worth tied up in equity, don't have 250K to throw in as an LP of a fund, or 500K, even if you did have access to, the Sequoias or Andreessens of the world, right? And so like that mechanism doesn't work. The math doesn't work in that way to allow this really incredible community of value add investors to be able to participate. So that's one piece of it. The other piece of it is this group, of more sophisticated investors, they have a perspective on deals. Maybe they're in the industry, right? Like a lot of the folks that invest with us are like CEOs of e-commerce companies. We don't invest in brands, but we do a lot of e-commerce SaaS, right? And so they have a perspective like, I know the Stripes conversion. I've tried this or this or this or this, right? Like they want to be able to put 10K into this company and put 200K into this company. And just giving money over to a fund for 10 years and not having a say on what, is being invested in, even if I think they had that money, liquid, to play around with in that way, is less exciting, right? And so when you think about the ability to invest on a deal by deal basis at the level of highly competitive, oversubscribed quality deals with top tier funds that we're accessing, given our just deep relationships and sort of foothold in the space, that's not something that's typically accessible, right? And so we're being very thoughtful in curating the people in the community, but then also being really thoughtful on the types of investments that we're making and allowing, again, if we write $1 million check, maybe it's 15 people behind the scenes and it's CEOs and founders and operators of D2C companies, agencies, SaaS companies, and then other fields that want sort of a more diversified experience, cybersecurity, right, and whatnot. So that's been a really kind of a paradigm shift within how we're approaching venture, and how founders are then receiving the support of this community behind us. So very intentionally done a different way.
Yeah, no, absolutely love that in terms of one, if I'm an LP in a fund, I am basically investing passively. That fund may go off and invest in 50 companies, 40 of which I actually believe in, and maybe 5 of which I, as an LP, might be able to support based on my own sort of networks and track record. Versus in your case with the SPV, I am actively investing in the companies that you think, or in the companies that I think, or I actually believe in, but the companies that I could potentially also help. So you do get a lot more depth in terms of that sort of community of people on your cap table who are aligned, who believe in your mission, and who have the networks perhaps and the expertise to actually lend a hand and give you the best chance of success. So would that be it in a nutshell in terms of the difference?
I think that's a big difference of it for sure.
Yeah.
I think there's also a level of, when people are putting in their own money directly, right? Like you care. You write a 50K, 100K check into a company, right? Like you're
Skin in the
excited to
game.
be part of the journey, right? But like it's also your personal money versus, again, in investing on behalf of pension funds, right, and endowments and things like that. Not to say for sure people care about track record and reputation, all these things, but there is something special when really incredible operators that like are known and and whatnot and can really help are writing personal checks. Like they really care and they want to roll up their sleeves and help, or be a sounding board, or make an intro, or help think through kind of challenges that the companies have to navigate. So it's really having like a bench of incredible talent, to call upon.
So taking the pulse of where the market's at today in terms of funding and cap raising, Julia, I mean, you entered the market in early 2022 when, valuations were coming way down. Like we saw SaaS companies oftentimes with valuations somewhere like 50x, right back down to say 5x. At the current point in time, so we're recording this in June of 2024, it seems like unless you've got AI in your pitch deck or you're an AI company, your valuation multiple is probably going to be quite conservative. But I would love to hear from you, like where the market is at today in terms of valuations, and are investors being a lot more prudent when it comes to doing their DD and taking their time to invest, because we did hear a lot of stories going back to say 2021 when people were throwing money at startups hand over fist, and it kind of felt like there was no time to do DD because if you didn't get onto the cap table, someone else would. And so it was, I suppose there was a lot of FOMO underpinning the VC ecosystem. Like, where is it at today?
So it's a great question, and I've watched it really closely, because I'm speaking to seed and Series A companies all the time. Which, to be fair, as they looked at like the stats, like seed and Series A didn't adjust as much as like Series B and Series C in terms
Mm,
of like valuations, right? Um, I do think that you had sort of initially this big correction, right, of companies, even some that were doing really well between last round and this round, that last year had to do like down rounds, right? And there was even one company that I kind of advised, like they were trying to get a little too cute on like not doing a down round, but adding warrants or bells and whistles or other
yeah.
advisors, other things to kind of get there. And I was like, VCs know what's happening. There's a correction. Like, just
Mm,
do the down round. Like, the people that understand that you're actually like growing and the foundations of your business are strong, and like it's just a correction on like the valuation market. Like, just do a fair price and like get this done with the right people, and like let's go build, right? So that was sort of last year. Then I would say probably, I don't know, let's say like 3 to 6 months ago, there were a lot of companies that were doing like seed extension rounds. And there was an interview I ended up giving because I was thinking about sort of data around this, that was basically talking about how there was this shift in my perspective from venture, where before, if you did like a seed extension, it was like, oh my gosh, there's not a valuation lift. Like, these are negative optics. And in this new environment, actually, if you did like a sizable seed extension with great investors, I don't think even anyone paid attention to the fact that like it wasn't an evaluation. It was like, oh my God, like, look, you raised in this market from great people and now you have an extra $5 million of runway. So I
mm.
feel like the negative optics of that kind of shook away. I will say the last few months, like, seeing some valuations, like I'm like, oh, there's these are some strong numbers,
Mm.
even outside of AI, right? So again, some of those are multi-exit founders, right? And some of those, it's maybe not as statistically significant of a data set to make a big, overarching conclusion. But I will say that it does seem like, there's definitely companies for seed and A that have momentum, that are holding their ground for stronger valuations. Like, I think we're heading not towards the bubble of before, but there's definitely a bounce back. And again, it depends on the founders.
Yeah.
There's still a group that are being much more conservative, which I think is smart if you're, bringing on the people that, again, are going to help you get to the next level anyway. And, to spend a shorter time fundraising time is also money, right? Like, you can grow faster and correct for the extra dilution later.
Mm.
Um, but I do see it shifting. I do think at the end of the day, like, I always wanted to invest in companies that had very strong fundamentals and had, an eventual path to profitability. We're thinking about unit economics, like these super FOMO, hype deals where, you kind of figure out what a model looks like later. Like, I don't want to touch those. Like, those are the ones that freak me out. And it's like, we have three
Yeah.
days to close and like all these people are in. It's like, but explain how the math works for your unit economics, please.
So
So
no
I think,
monkey, no
those,
monkey JPEGs for Pari Passu then?
no, I think not. But I think, again, like that, for me, having always been or aimed to be that kind of investor, it doesn't really shift the companies that I look at. Like, I never would want to look at those ones that were just so hype and just raising off of, I also think it's also very short-sighted. Like, there are some
Mm.
companies that we're speaking to now that we got introduced actually through one of our LPs that's a customer. He's like, please speak to this company because I would love to put money in, and they're killing it, and they're bootstrapped, and we're speaking to them now, and we're helping them kind of think through, what a round could look like. And a lot of that guidance is also, don't just optimize on this valuation. Think about what that means for what you need to hit for your next valuation. Like, don't be short-sighted and then set yourself up to be in a tough situation or a tough spot where, you're not thinking of what the exit valuation would be and will it be exciting for an investor,
Mm.
the lift of that, right? Like, there's a lot of nuances when you think in a more longer term way. um So it's fun to watch that and to hopefully help guide some companies towards that. But it's definitely been a little bit of a roller coaster. I think
Yeah.
the good companies will always get funded. Again, the ones that are resilient and the ones that are adaptive and the ones that, again, we're never counting on just round after round before they had to figure out actually making a profitable business.
Mm.
Um,
Absolutely.
Maybe
And
at slightly different valuations. Yeah.
yeah, and in terms of seed stage valuations, I think they are holding strong at about 15 million US on average. So they've not really taken a hit like your Series B and C, as you alluded to earlier. But are you finding that in a tougher funding landscape that founders are becoming perhaps more resilient, more conservative with how they choose to spend their money, more capital efficient, and that this perhaps will create a new breed of founder who is just much smarter when it comes to looking at those unit economics and actually building a business based on fundamentals, not based on, hey, let's just throw money against the wall, hopefully drive revenue and grow our audience, and then we figure out how to become profitable later.
I think so. I think it also self-corrects itself where, the founders that have, I think this vintage of founders coming out of, this ecosystem will be some of the best we've seen. I think you've seen that sort of like historically in some of the difficult times when like some of the unicorns, so
Mm,
multiple have emerged. I think that, the founders that are succeeding now are on the most part, yes, like prepared for what if a war comes tomorrow and then we need 6 more months of runway, right? Or then X, Y, and Z changes, right? I think also how founders think about or should think about what investors they bring on, bringing on folks that actually, again, roll up their sleeves to help because the theoretical shit could hit the fan and has in the past. And so
mhm.
you want actually people that can add value and don't just want to be passive investors and maybe have a unique perspective on your industry, right? Or connections that can be useful to help if something does go wrong. I think also what I'm seeing is the founders, I would say, I was going to say the founders that are smart. It's like everyone can be smart in different ways. Okay. The founders that I think are approaching this more thoughtfully are raising more
Mhm.
between, seed and A, and not just banking on another round in 12 months and kind of giving themselves an extra buffer for what may come, but also to really figure it out. And if the benchmark shifts for what metrics need to be hit to get to the A, they're not going to be, stuck in a tough spot. Um, I'm seeing that with a bunch of founders. Like they're essentially raising more to be able to, some of them even skip the A, right? Or like have to do
Mm.
maybe a small bridge and, just have real runway to get there and not overthinking, short-term dilution.
Yeah. Are we talking about, say, like 18 to 24 months runway as opposed to 12 months? Like, what are these, everyone's smart in their own way, but the more thoughtful
I
founders,
think
as you put it.
I think it's 24 months.
Yeah.
I think it's comfortably raising 24 months of runway. And then if your business is killing it, you have the option, of course, in 12 months to, dip your toe and think about a round or have someone preempt a round.
Hmm.
One of the companies that we're backing now, which I can't give the details around, but they still have like 3 million in the bank from their seed round.
Yeah.
And, they're doing a kind of like a baby A, right? And so it's the benefit of being thoughtful and growing within the space and not banking on a round happening. But then, you have the opportunity for really good folks to say, well, what would growing faster look like? And, show me, show me that path. And then, wanting to put fuel on the fire.
Mm.
So yeah, I think it's 24 months, give or take. I mean, you want to have basically 6 months of runway in the bank before you start having conversations. Otherwise you approach fundraising from a place of lack and people can smell the fear.
Yeah.
But yeah, that's how I think about it.
Awesome. Awesome. And fundraising is one thing, spending money is another. And Sam Altman, a few months ago now, and it's become a bit of a trope, but he basically said that, we're entering an age where one person can build the next unicorn thanks to AI and AI agents and things of that sort. Now, that's a nice headline, makes for a good YouTube, thumbnail. People will click on it. How true it is, I don't know, but it's hard to argue that AI, as it continues to evolve, will bring downwards pressure on things like, talent overheads, infrastructure overheads, and things of that sort, effectively building more capital efficient companies. Now, do you think that as we enter or go further into this age, that founders might not need to raise as much capital or go through as many rounds of cap raising to build a venture scale returns company.
Yeah, I think it's fair. I think it is a logical conclusion. I think from a development standpoint, right, like where AI will eventually unlock the ability to create and not have to hire a massive dev team, right, and things like that. But I think there will be other areas where, there'll be a correction, and if that's the level playing field and everyone can create, it's like, then where do you differentiate yourself? Is it go to market? Is it there? Is, like
Mm,
there will be other elements that then need to be um, supercharged in different ways as companies want to differentiate themselves. But
yeah.
yes, I think so. I think it's absolutely logical, and it's in parts of that are very exciting.
Yeah. Could not agree more. And just for the founders listening to this, or for the aspiring founders, one question you probably hear it quite a bit, but I think it's useful for our audience to hear is how much weight do you put on warm introductions over someone just clicking apply now or contact us on your website, Julia?
That's a great question. So I actually listen, warm intros are nice, but there's an art to cold intros.
Hmm.
And one thing that, like, my best piece of advice, it's like if there's one tactical piece of advice, if you're going to cold email a partner at a fund or whatnot, use the real estate of that subject line thoughtfully. Do not have that say catch up, coffee, investment opportunity. Like,
Yeah.
literally the subject line should be 2 million ARR, SaaS, seed raise, like whatever buzzwords, like actually, like, and then I'll open it and I'll happily look at it and I'll appreciate, like, the proactive nature of that. So
Mhm.
I think a warm intro is nice, but I think it's definitely not something that I put a tremendous amount of weight on. If that's something that's stopping you from, like, cold emailing, a person,
Yeah.
don't do it literally right now.
Yeah. And do you prefer to see a deck or a short memo that you can like cast your eye over in 30 seconds?
Deck is great.
Deck is great. Interesting. Cool.
Yes.
Um, well, that's useful for our founder audience to get across. So pari passu is Latin for equal footing. So what was the impetus behind calling the firm pari passu, and what does equal footing mean to you and the way the firm operates?
So equal footing to us really means, like, founder supporting founders, right? Like
Hmm.
operator supporting operators, right? I think that's the way that we approach how we support our entrepreneurs. They really view us as a partner. They really view us as on their side of the bench, right? I think that's been the most important seed thought of what we're building here and what's evolved with this community. And so when we launched this app 3 months ago now, called Pari Passu, that was meant to be like the tech home for this community and just the extension of everything that's been already, knock on wood, working very well since December of 2020. It was about how do you create, like, a home for this community of accredited investors, of founders, of operators, to be able to support each other. And so for some people, sure, they're investing in us and, putting angel checks to work, which is wonderful. Other people that are in the fold that maybe haven't written a check yet are having a pulse on the most exciting companies within ecom tech and consumer tech and defense tech
Hmm.
and AI. And there's synergies that are happening. There's partnerships that are happening. There's, like, there's a very powerful ecosystem beyond even the transactional nature of this. Like, right now, we're just focused on, like, who are the people we should have around the table. Um, and that's something that's, like, very exciting, because whether someone ends up investing or just having a finger on the pulse to say, like, you should look at this company because they're an entrepreneur and they're integrated with incredible tech and they're, meeting new people that could be potential investors every day, or sorry, potential companies to invest in every day. That's all very additive. And so that's kind of what this village is that we're creating, the village
Hmm.
of support, founders backing other founders, operators backing other operators, and hopefully succeeding all together.
Yeah, absolutely. Love that. And perhaps in the time we have left, I did mention Alexander Wang earlier in the conversation, and he published a memo last week, basically announcing that his firm Scale AI would hire on based on a purely meritocratic basis. And I have a quote here from yourself as well, which was, it wasn't to fill a diversity quota, it wasn't for optics, and it surely wasn't charity, but because they built incredible businesses that knocked the socks off stats for product market fit momentum, innovation, market size, and more. It's not about lowering the bar for diverse founders, it's about opening the door. So I'd just love to, quickly get your thoughts, and it's obviously not a topic that it's a nuanced topic, but on Alexander Wang's meritocratic hiring process and how you go about sourcing diverse applications from founders looking for capital at Pari Passu.
Yeah, it is in 3 minutes. No kidding. uh, Listen, I think that, that post, was so important to me because it was highlighting, that post was highlighting founders of EdSites, NFC, and AI, both of which are female powerhouse immigrant founders. And I just wanted to be clear that I wasn't backing these companies again because I needed to sort of tick some box, right? Like they built incredible businesses. And the way I think about backing companies, is really to your point, that quote of the top of funnel, right? Making sure the top of funnel is as broad and unbiased as possible, making sure that you're really like, crossing the gamut, of different types of not just demographics, but like how people think about the world, right? And perspectives and geographies, right? And things like that. And so at the end of the day, as long as the top of funnel is fair and open, then you should hopefully land in the same place of just backing incredible companies.
Yeah.
That's how I approach that.
Yeah, no, that makes sense. And I think, Scale AI, the memo says something similar where it's along the lines of, I've got the quote here, there is a mistaken belief that meritocracy somehow conflicts with diversity. I strongly disagree. No group has a monopoly on excellence. A hiring process based on merit will naturally yield a variety of backgrounds, perspectives, and ideas. And so to your point, it's about that top of funnel, bringing people in from across different sort of backgrounds will naturally yield investments, not based on ticking a box, but based on founders from diverse backgrounds building awesome businesses, essentially.
I think so, but I think you also have to check yourself where, like, again, is that funnel as open and broad and diverse, like as you mean for it to be, right? And so, as I think about, for example, like 2% of female founders get funded, right?
Yeah.
I think having more female check writers, I would hope, at least subconsciously, you fight some of whatever bias there is, that hopefully then that's part of the answer of more women getting funded, right? And so part of what I'm excited about for Pari Passu is that we're empowering people to be check writers and to be also the people that are flagging deals for us and to be the people that are, helping make those decisions kind of happen, right? Of like who gets backed, right? And so hopefully having a broad base of incredible accredited investors and operators and founders, will then also mean that they will bring in, and help us bring in, a broad base of, incredible founders, to back.
Yeah, absolutely love that. And that's an awesome place to end this conversation, Julia. I've really loved learning from you today, and I'm sure our audience did as well. Of course, if they'd like to learn more about Pari Passu, they can head over to ppvp.com. And is there anywhere else you'd like to direct them if they want to connect with yourself?
Yeah. If you want to be a part of our ecosystem, you could download our app. It's called Pari Passu. So it's on the App Store. We'll be on Android soon. Really quick application process of putting your LinkedIn, confirming you're accredited, and then joining the ecosystem, right? And finding ways to add value and to participate in the companies that resonate with you. And if anyone wants to reach out to me, you are more than welcome to LinkedIn me, and I will absolutely look at any cold emails with any decks of any companies.
Well, they know how to they know how to tailor their subject lines now, Julia. So expect a few of those to come through. But Thank you so much again for your time, your energy, and just your thoughtfulness in your responses today. Again, like I said, really enjoyed the conversation and wish you all the best with Pari Passu.
Thank you so much, Steve. Appreciate you having me, and looking forward to keeping in touch. Thank you so much.
Awesome. We are done. Thank you.
Thank you so much. That was fun. That hour went by very quickly.
Yeah, we touched on a lot of like I had about 25 questions pre-prepared, and I think I got through about four of them because we just ended up going through all these different tangents, which it's more fun that way anyway.
Yeah,
Yeah, awesome.
wonderful. What's just for me to know, or I guess I'm sure Bev will follow the Evan Easy will follow up.
Yeah.
What's like the timeline for when you
Wow.
think this ends up airing?
I'm very much a just in time